Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. Well, who's in the podcast with us today? It is the professor himself, Mr. James Eng. James, how are you?
Good. Thanks for having me, Paul.
Well, we're getting towards the end of the summer. Kids are starting to go back to school, and there's starting to be a great level of activity in multifamily. You know, we had the interest rates go up a little bit in the springtime. We're trying to determine what values are here in the summer. And with the kids kind of going back to school, I think people are starting to put their big toe back in the water to try to figure out this is a good time to get back into multifamily. So today in the podcast, we have one of our friends, Mr. Brad Sumrok with the Sumrok Group. Brad and I and James, I've known Brad for 10, 12, 13 years. Consider him one of my good friends. We definitely do support the Sumrok Group, which is a national educational mentoring group. And I want to, kind of talk a little bit about what's going on in Brad's life. I mean, he's going to share some stories with you, and he's going to talk a little bit about some of the things that are going on with his 5th annual AIM NatCon. So we'll talk a little bit about that in a second, but I'm going to turn it over to James. And James, tell us a little bit about what's going on.
Yeah, Brad, thanks for coming on. I guess maybe to start, I mean, obviously people have heard your name probably, but maybe give them a little bit more insight into your background and sort of how you got started in this multifamily business.
Yeah, and I love when I'm asked that because it's been 20 years. It's been a 21 plus year journey, actually. And whenever I'm asked that, it's like, wow, never in my wildest dreams did I think I'd be doing what I'm doing now, which is owning apartments and helping other people make a bunch of money and save taxes with their apartments. But I'll tell you, look, I had not one degree, but 2, and got to the grand total of $10,000 a month in income over a 17-year corporate career and worked for 5 different companies, was fired once, was laid off once. And reading Rich Dad, Poor Dad back in the year 2000 absolutely changed my life. It gave me one of those aha moments, one of those life-altering light bulbs that went off in my head. And that encouraged me to go out and seek a different path, which was real estate. And ultimately, I decided to do multifamily real estate or apartment buildings. And that was a decision I made 21 years ago.
Yeah, so I know I've heard your story a couple of times over the years. And so you started with, I think, probably a 32-unit deal or maybe 2 32-unit deals. And then progressed all the way up to, I think you guys just closed $50-60 million deal in Nashville. So give us a little bit more insight into how you go from a 30-unit deal a couple years back and into buying such a large deal just this last couple months.
Yeah, it's crazy. My first deal was a 32-unit apartment building in Pasadena, Texas. I could remember it like it was yesterday. I bought it with my own money, had no investors. And, I was following the guidelines through my mentor, which was buy as many doors as you can under one roof. And so that's what I did. So my first 2 deals I actually bought with my own money. It was a 32-unit and a 30-unit. By the way, those deals I did while I was still working. So don't quit your job to become an apartment investor. Quit your job after your income from your investments replaces your W-2 income. So that took me 3 years to replace my $10,000 a month income, by the way. But my first 2 deals were buying deals with my own money. And then what happens is you run out of money if you're using your own money. And so you could stay small and you could kind of wait to exit those deals to buy something else, or you could learn how to syndicate deals, which involves, raising money from other people. It involves SEC compliance, a little bit more paperwork and skill sets and expanding your professional team. But my third deal was a 250-unit property that I largely did with other people's money. And so that's when I started learning the true benefits of syndication, which is doing bigger deals, having better economies of scale, getting better debt, helping your investors, uplifting more units. And because we're not just in the business to make money. Like if you have 100-unit complex, you're improving the lives of the 100 families at that building. So it's a win-win-win. It's like we win, the residents win, the investors win, obviously assuming everything is implemented according to the business plan. So I just counted, actually, guys, I, after 21 years, finally crossed the 10,000 unit threshold of deals that, and most of these deals are deals where I'm a GP and some of them are LPs. So I'm counting my total units that I've invested in. And here's the irony. Since COVID, when the world shut down and a lot of people put their head in the sand, I've done 18 different deals, over 4,500 units, just really in the last 2 years. So I've had my foot on the gas, and I still have my foot on the gas right now. And that's what I think I wanted to share the most, is that this business is a lot of invisible progress. It's not like a job where you work an hour and get paid an hour, or work a month and get a salary for a month. There's a lot of work that goes into it, with sometimes little result or no result. But then as you grow and accumulate experience, track record, your paychecks get bigger and bigger because you're adding more value to people.
Well, Brad, I mean, that's your story, but because you were born with a silver spoon in your mouth, is that correct?
Oh, yeah. I mean, my parents gave me tens of millions of dollars in loans. No, I mean, my mom never went to college. My dad didn't finish college. I grew up in a 1,400 square foot house with a family of 6, and my dad made $42,000 a year. So, hey, look, I was taught to study hard, get good grades, and go to college. And I wasn't even that good at that, because I worked for 5 companies in 17 years and was told that I didn't have what it took to be management. And I'm serious. Like I wanted to be, a C-level employee for a Fortune 500 company. And I was told that I came in late, left early, took lunches, and took all my vacation, and didn't have what it took to move up the ladder. And so I had to pursue another path, which was to be an independent entrepreneur, apartment investor, to make millions of dollars.
So Brad, a lot of people on the podcast, they are general partners or limited partners in deals. And so I guess, when did you make the decision to sort of transition not only from apartment investing as a GP, as an independent owner, into sort of the education space? Do you remember when you made that transition, and sort of talk about that progression?
Yeah, I mean, look, it's no secret. I mean, I started by going to a seminar and having a mentor, and my beginnings started at Lifestyles Unlimited, and I don't have a problem saying that, because they helped me a lot. And when I quit my job in 2005, I went to work with them. So I became one of their mentors, got my brokerage license, ended up doing their seminars. So that's how I got into the education business. But after time, we grew different directions and wanted to do my own thing. And so I actually took a whole year off in 2012, where I didn't do any education. I didn't do mentoring. I basically just bought 1 or 2 deals and was trying to figure out like where my groove was going to be in the next part of my life. And what I found is I really missed the mentoring, the education, helping other people. And so for me, that's where I make impact. So I never got into the business because of the money. I got into it because that's how my life changed. I was the most skeptical person in the seminar. And so if you could take somebody like me that was skeptical and have that turnaround be successful, then that's the gift that I want to give to other people. So after being out of the education business the whole year of 2012, my wife and I decided to get back into it together, and we created our own company. So now we're coming up on a decade of having our own mentoring and education company.
Yeah, that's great. You guys have done very well. But I want to go back to maybe a question that we didn't ask at the beginning, because I was talking with some investors the other day, and they're talking about apartments. And one of the things that they said, and these are smart people, they said, I'm just going to get into single family investments. And I know that back 10, 12 years ago, you got into a single family deal. And so tell me the difference. Single families are great, but tell me the difference, how a single family investment impacted your life versus multifamily, and how do we look at the difference? And what would you advise people that, smart people, what they should be looking at these days?
Yeah, so I like to talk a lot about things that I have direct experience in. And fortunately, I do have direct experience in single family, but it was only one single family rental. So just as a disclaimer, I don't have tons of experience. And what happened was I already had over 1,000 apartment units under my belt. And because I was teaching a seminar that involved single family investing, I felt like I would be incongruent teaching people to do single family if I didn't have at least one on my own. So that's actually why I went out and bought a single family home when I was doing a 2-day seminar that involved single family and multifamily. So look, but I could tell you it was a big difference. So at the time I had over 1,000 apartment units, and the property management company does the leasing. The property management company does the maintenance. The property management company does the bookkeeping. The property management company pays the vendors. The property management company oversees the make-readies. The property management company hires the staff. In my single family home, I did the leasing. I wrote the ads in the green sheet back then. I don't know if there's still a green sheet now or a Craigslist. I don't even know if that still existed today. I'm dating myself and showing everybody how old I am. When the tenant didn't pay the rent, I had to go to court. When the tenant moved out, I had to walk the unit. I had to hire the handyman. I had to pay the handyman. I had the keys. With the apartment buildings, I don't have the keys, and I don't have a job description. Now I am, in many of these deals, I have substantive duties. I'm an asset manager. I do investor relations. I raise capital. I'm involved in meetings. I'm securing debt. But none of these involve like a day-to-day, 8-hour-a-day type of role. So apartments have allowed me to scale a lot faster and to be more on the right side of the cash flow quadrant that Robert Kiyosaki talks about, which is being a business owner and an investor, as opposed to being a self-employed landlord.
Yeah, I think that's an important distinction for a lot of people that talk with doctors, I talk with lawyers. I mean, their first big thing is they bought a house, and so they lived in their house, and they were thinking about trying to buy, another rental property or a rental property, and they were never exposed to or never knew what the rules were for apartments. So let's talk a little bit about your educational platform and what you guys do, which I think is great.
And by the way, Paul, like for a lot of these professional people that are real busy, sometimes they have the dilemma because they're like, okay, I don't want to do single family because I got to do all the work, but I don't want to buy an apartment building because it's even more work. But they could also be passive investors in apartment buildings where they're leveraging the time and energy and expertise of other people. So, a lot of people don't even think about that option, but it's a great option for people to get into the business.
I just want to tentatively hit upon AIM-NatCom first, and then I want to go back into some stories that you could tell us about owning some apartment buildings and some fun stuff like that. So can you just give me a high level what AIM-NatCon is?
Yes. AIM-NatCon is our Apartment Investor National Conference. So it's different than our Apartment Investor Training event, Rat Race to Retirement. So I know for people that might be listening the first time, they're like, well, what's he talking about? But I do a 3-day apartment investor training event where I teach the ABCs of apartment investing. That's Rat Race to Retirement. But AIM-NatCon is something different. AIM-NatCon is when I bring in other speakers. It's the only multi-speaker event that I do. And so I like to bring in some of the best people in the industry and even outside of the industry. And as an example, like in the past, we've had Grant Cardone, we've had Robert Kiyosaki, we've had Damon John, we've had Jesse Itzler. This year, we're going to have an amazing lineup. So not only are we going to talk about apartments at AIM-NatCon, of course we are. I mean, that's what I eat, live, and breathe and sleep is apartment buildings. And so that is a big component of AIM-NatCon. We've also brought in like the president of the National Apartment Association. So AIM-NatCon goes beyond like the Sumrok framework of finding deals and analyzing deals and raising capital for deals and managing deals to say expanding that pie to like, I know people don't like to hear the term mindset, but like, hey, I'm at a Tony Robbins event right now. 80% of your success in business is your belief system and your mindset. So at AIM-NatCon, we talk about mindset, we talk about markets, we talk about marketing. Like if you want to be a syndicator, not only do you know how to find, analyze, fund, and oversee deals, but you need to learn how to raise capital legally and build up your brand. So we also talk about that. So the AIM-NatCon event is not only me, but it's like my mentors and some of the best people on the planet that are educating people on apartments, on mindset, and on marketing and branding.
Yeah, I'm going to throw this back to James in a second here, but some of the people that you have on stage with you, again, this is multi-person event, is Tom Wheelwright. And we've had just about a huge amount of changes going on in Congress about some differences of tax laws. $80 billion is going to be spent. And Tom Wheelwright, who's Robert Kiyosaki's Poor Dad's tax guy, he's going to be with you. Is that correct? Is he going to be speaking?
Yeah, Tom is going to be there in person. And, since the recent passing of the so-called Inflation Reduction Act, Tom is going to dissect that and give us the highlights in terms of what we need to do as apartment investors, real estate investors, and entrepreneurs. Because, see, the people at AIM-NatCon, many people are apartment investors, but we have many people there's two types of people at AIM-NatCon. There's apartment investors and there's soon-to-be apartment investors. And so we have people that are doing all types of real estate, no real estate at all, but want to get into real estate. They're already entrepreneurs and business owners and are curious about real estate. So, look, it's incumbent upon us as individuals to understand what's happened and how it's going to impact us. But it also is a shortcut to success is to leverage the experience of other people. And so I don't know anybody better than Tom that's going to read those laws and dissect them and tell us what we need to be aware of and how we need to pivot and what strategies and tactics we need to be doing as a result of this past legislation, if that's what it is legislation, whatever it is, a tax bill or whatever the act that was passed.
Yeah, Tom's great. And then are you going to have Charlie Young? We've had Charlie Young on the podcast before, and Charlie is just a very dynamic speaker, owns thousands and thousands of units, and you couldn't come up to him and shake his hand on the street, but at AIM-NatCon, he'll be there with you. And then I would imagine, is Charlie going to be there with you?
Yeah, Charlie's going to be there in person. Charlie's one of the people that I look up to when I said I have my foot on the gas. See, one of the keys to success is you got to pick who you're going to listen to and who you're going to look up to. So I look up to people like Charlie, and Charlie's had his foot on the gas for the last 2 years, and he's been buying up a lot of great real estate. And so he's one of my mentors and guides to this business, and he'll be there. And for those that don't know Charlie, he's the principal at Madeira Residential. He heads up acquisitions and broker relations and identifying and dominating the markets that they're in. And he's one of the best in the business. And so he'll be talking about markets and why he's so bullish on buying. And then Paul, also Charlie's partner, Dave Marcinkowski, will actually be there. And Dave is also one of the owners of Madeira, but he's accountable for their management, property management, and technology. And so that's a huge piece of the pie, is not only buying the deals and raising the equity and getting the debt, as you know, that gets you to the finish line. But then you need to have a really strong team that implements the business plan, does the property management. And also Madeira has been one of the industry leaders in technology, where they've created some proprietary technology packages, and I'm talking about like smart locks and thermostats and Wi-Fi and TV and cable packages that add a lot of value to the residents and also add a lot of value to the ownership groups. And so as things have gotten more competitive, we need every edge that we can to find ways to add income and add value to properties.
So Brad, you have a lot of students on your mentoring program now. And so you've obviously seen a lot. Talk about sort of the first half of the year, what you guys were seeing, sort of how you're putting deals together versus what you're seeing. We're sort of mid-year right now, what you're seeing for the second half.
Well, look, I guess some people might call me an eternal optimist, but I could just tell you this. In the 21 years I've been doing this, I've always found a way to pivot with strategies and tactics. And so let me just give you an example. The first quarter of 22, the people on the sidelines were saying like, well, it's too competitive right now. There's too much money chasing the same deals. How am I going to compete? We have 30 offers on this deal, 7 people in the best and final. Like, how am I ever going to compete with that? I'm going to wait until the market softens a little bit. And now we have a time where the market has softened a little bit because of the headwinds with debt, right? You guys are intimately familiar with that. So we've seen, pricing drop. I mean, one deal that was marketed at 28 million in April is now under contract at 23. That's a 12% discount. So, now people are saying, well, I have to put more money down. The interest rates are higher. And so look, like for 2 decades, there's always been a reason not to do this, and just going back, like I remember I was buying in 2009 and people were like, well, you don't want to catch a falling knife. And in 2012, lenders weren't lending any money. So we would syndicate deals and buy them all cash. I mean, Paul, you remember we were doing that, buying deals for $17,000 a door with no debt. And, we always found a way. And that's what I mean. Like, if you're willing to change your strategies and tactics, like buying makes sense. If you have the right expectations, and the right business model and the right expectations, it always makes sense. And so right now, real estate is on sale compared to where it was in the first quarter. But people were spooked. The people that watch the news and they hear about recession and they hear about inflation, they're spooked. But like to me, when I hear about inflation, it excites me because, people being spooked doesn't excite me, but like inflation it's one of the best times to be buying apartments. Like the value of your dollar is going down 9 or 10% right now. But, I just saw an article in the Dallas Morning News on August 16th that nationally rents are still up 30% year over year. And this trend started in the pandemic and it hasn't gone away. So like we want to be in assets that are going up faster than the value of the dollar is going down, and also to keep things in perspective. Like my first loan in 2002 was a fixed rate loan at 6.375%. And now that I don't think there's probably not many loans that even with an interest rate cap will go over that. Or maybe, what's the current, on a variable rate loan, even with the spread, like where is that going to settle in at?
On bridge, it'll be 6 or 7. So,
yeah,
but
I mean, it's
Freddie,
the same as it was with a fixed rate loan in 2002.
Right.
And you guys are the experts on this, but like to me, we're already seeing signs that the capital markets are starting to stabilize. So it's still TBD, but like in my experience, whenever there's things in the market that aren't expected, the capital markets they build in extra. Like me and Mike Becker were doing a deal in November of 2016. We had an escrow and Trump won and he wasn't supposed to win. And the rates skyrocketed like 100 bips. And so I think we underwrote it at like 4.25 and we closed at 4.9. It was an unexpected thing that happened. And that was in November, December of 2016 where that happened. And, when COVID came out, they started cutting LTVs. And I mean, you guys know this, right? But we had all this interest rate reserves that nobody was accounting for. And then equity groups had to bring more equity and just leave it into a escrow account for COVID reserves. And now we have all the interest rate caps. But like you guys tell me this, I mean, we're already seeing that starting to stabilize a little bit.
Yeah, I mean, I think it's more of a shift away probably from bridge lending and more into just sort of your standard Fannie Freddie, what we're seeing right now. But talk about maybe some mistakes that you see investors making and how does someone being in it, like a lot of people get into real estate because they want to do it on their own. And so talk about mistakes that you see maybe some of those investors making, but then being in a mentoring program would help them reduce or just completely ignore some of those mistakes.
Yeah, well, I mean, there's a couple things. And I think it's always been true, but it's certainly true now, is if you're investing in a deal as a passive investor or even as a GP where there might be other GPs involved, it's so important to vet the underwriting and it's so important to vet the other GPs and know who you're getting into business with and what's their track record, who's on their team, who's going to manage the deal, what is the management company's track record, how much liquidity do people have? Have they stress tested the deal in the event of a blip or a recession in the economy? What's going to happen if things don't go well? I think these are important, okay? Because we all get into this business for a bunch of reasons, and one is cash flow, one is appreciation, one is tax benefits. But the one that people don't always talk about is just not losing money, also called capital preservation. And so nobody expects to get into these deals and lose money, but whether you're an accredited investor or a non-accredited, sophisticated investor, part of that is understanding that any of these deals could potentially lose money, and they could lose money for a variety of reasons, whether it's decision making of the GP team or, economic cycles or whatever it is, right? There could be reasons why things don't go as planned. And so people need to be accountable for their own investment decisions and properly vet and understand what it is they're investing in and who they're investing in. So that's number one. And then number two would be when people that are relatively new, that are building up their teams, they shouldn't be using advanced strategies that people that already are more established and have stronger teams in place. And like an example of that is like, there are some very established firms that, might use anchor equity or preferred equity as part of the capital stack. But then when I see like a relative newbie doing it, look, it increases risk for everybody, but the companies that are more experienced are going to be able to better implement these business plans. And so like for me, if I'm investing with somebody that's on their fourth or fifth deal and they're putting in pref equity in the capital stack, I'm going to be very hesitant about that. Whereas if they have done more deals and they have a stronger team and a stronger track record, then I'm going to feel more comfortable about that. So there's a certain learning curve that people should go through. And so what I see is a lot of relative newbies implementing strategies and tactics that might be over their head.
James, have you ever flown on a jet?
A jet?
Airplane? Yeah. Airplane.
Not this quarter.
Well, I mean, you look at the cockpit when you walk onto that jet, and hopefully it's a man or lady that has a lot of silver hair and has been flying for a long period of time. But there's a lot of like student pilots that want to get into the jet and try to fly the jet, but they don't have a lot of history, or they have a lot of dreams that they want to do it. And, the passengers go to the right and the crew, the senior crew go to the left to fly the airplane. But to get it to be a senior captain, instead of just a student pilot, they had to go through specific education. Learn how to fly the airplane, to take off, learn how to the most difficult part is actually land the airplane, to learn how to do it. And in real estate, that's pretty much the same thing with educational mentoring programs. You have to have specific education. You have to have somebody that's teaching you, just like a certified flight instructor. So you're not killing the 150 passengers in the back, or as we would call them, limited partners in the back, is that the people in the front of the cockpit, the captains and the first officers, they kind of know how this thing is done, and they use transfer credibility experience. They may not have it right now, but going through classes like what Brad does, that transfer of knowledge in that kind of that group think with all these folks at AIM-NatCon or at Rat Race to Retirement, that in joining his program, that's specific education. And if you're a limited partner that's sitting in the back of the airplane is having their Coke and their peanuts, I think you can feel a little bit more comfortable that having that captain go through the best certified flight instructor out there would ease their mind to make that trip a lot more successful. Is that correct? Specific education is what helps people, Brad?
Yes. I mean, look, the more educated you are, and let me just say this with a caveat. So number one is the more educated you are, the more you should reduce risk. But like, I just want to say this, we don't get educated for knowledge. We get educated for action. And so some people go to conferences or they have mentors or they have coaches, but they're not taking action. So, I'm here at a Tony Robbins event, stepping out. And that's one of the things I heard Tony say. It's like, we're not just here to get educated for knowledge. We're here to get educated for action. So education plus action is the roadmap. And so if you're going to invest in education and mentoring, which, by the way, I believe is paramount, your actions need to be following the advice of your mentors. And the other thing is, people love to talk about their wins, but when things get challenged, people don't like to reach out for help. So, when you asked about mistakes before, everybody likes to share how good they're doing, but they don't always like to reach out for help until sometimes it's too late. So if people out there that are in a challenge, just know that whether it's me or somebody else, there's always somebody else out there that has been down that path before. There are people that have been down that path before that you could leverage, and you should leverage their experience.
Yeah, so a lot of people, if they're out there on their own and they're trying to figure this out and they're in a 50 or 100 unit deal on their own, they're not going to have the group. I mean, I don't know how many students you guys have now, but we were just at an event this past weekend with 250, 300 students. And I mean, the amount of knowledge in that room in terms of community, but then also the number of deals that you guys have bought. I think you put up a pretty big number the past 3 or 4 years. Do you even have that number, like in terms of how the program has grown from in size on the number of deals you guys have bought since you started?
I mean, it's gotten so big that it's been hard to track, but we've done like over 5 billion in assets under management, over 600 apartment complexes. Just in the past, probably 5 years, over 600 apartment complexes, over 60,000 units. So it's a big number. And, you guys know I'm not making this stuff up because you're involved in a lot of these transactions and you see and the people doing the deals.
Right. So, I mean, when you're in a mentoring program, you have that community, you have those people. When there are issues or things that come up, then you can rely on that network to help you figure these things out versus being on your own. And I think I think initially people think, well, I don't need an education program because I know how to calculate cap rate, right? But there's that initial piece of learning how to underwrite, but then also once you're in those programs to figure out how to succeed after you buy the deal. Because I think you said, yeah, there's a lot of work at the beginning of these deals for 60 days, but then that's really the starting place. You've got to execute on the business plan. You've got to pay back your limited partners, and you've got to earn a return on this money. So,
right.
Brad, maybe to wrap this up, tell people, the best way to either reach out to you with questions about your next event or your programs that you have available.
Yeah, so a couple ways. I spend way too much time personally on social media. So like I always tell people, if you email me, good luck. But if you actually send me a direct message on Facebook, Instagram, or LinkedIn, you're much better to get a personal response from me. So I tell people that all the time, because like we're all walking around with our phones these days. So that would be a personal connection. And then look, our event's coming up. This is the one apartment investor event remaining in 2022 that you absolutely need to be at. Okay. And I can tell you who, like already we have, besides me and Jen, Charlie Young is going to be there. Dave Marchinkowski is going to be there. These are apartment experts in acquisitions, equity, debt, management, and technology. Tom Wheelwright's going to be there. He's one of the best in taxes. Ed Milet is going to be there. He's worth $400 or $500 million and is a very powerful entrepreneur, coach, mentor. He talks a lot about mindset. Jesse Itzler will be there. He's one of the best speakers I ever listened to and a personal favorite of mine. And he pushes us to the extreme mentally, physically. When your brain says that you're done, you're not done. It's going to be an outstanding event that will never be repeated with the same exact lineup of speakers and content. So it's a one-time unique event that we do each year, but every year it's different because of the speakers that we bring in. So this event is September 30th, October 1st, October 2nd. The URL for that is AIM, AIM, as in Apartment Investor Mastery. And then NAT is in national, and then con is in conference. So AIMNATCON.com. And it's going to sell out. So this is something that, we're often at virtually, but like we all know that everybody's experience in person is like a 10x experience as opposed to doing it virtually.
Yeah, if they didn't get that email or the website address, they can just go to bradsumrok.com. Is that correct?
Correct.
That's a little bit easier. BRADSUMROK. Some rock, some don't. So we certainly
got it, Paul.
Any final words, Professor Eng?
No, I appreciate you coming on. I know, we've had some people on and, it's sometimes difficult. I think people read the news and look at their stock market portfolio balances and they get a little bit nervous. And you said it right. When there is always an excuse to not buy. But I think you have to figure out a way to put these deals together. And the guys who have done that have succeeded. And so I think figuring out not only how to buy these deals correctly, how to put the right debt on it, how to underwrite it, and then manage these deals, it helps obviously listening to the podcast, but then having a community of people around you is a huge, huge value add in this business.
That sounds good. All right. Again, our guest today was Brad Sumrok. Again, Brad, BradSumrok.com. Go to his website if you're thinking about trying to get into multifamily. And again, with dedicated specific information about training, they're the guys that do that, and they do a great job. So we definitely do support Brad and his group. So Brad, thanks for being on the show. We certainly do appreciate the professor. Thank you very much. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.